Hey, what's up, guys? I wanted to give you another Gold Bullion Presents. All right, so this one is the 4 pillars of success in Forex. It's a very simple presentation, guys, and it's awesome to always share something with you that always brings out the best in you. So remember, Forex trading, guys, has 4 pillars. For me, it's 4 pillars. To others, it's 3. Others, it's 2. Some might even be 1. I don't know how that works, but for me, just it's summed up into 4. Number 1, psychology. 50% of your effort must go into your psychology. You need to watch your mindset, your discipline, your patience, your confidence, and emotional control. It is here in the psychology where we talk about revenge trading, things like revenge trading, when to trade, when you can't trade. If you are trading because you want to pay the bills, you definitely shouldn't even trade. Always trade money you're willing to lose. So all that whole type of thinking falls under psychology. I've done a whole book around that. You can just check the links below the video to kind of like have access to some of those other materials that I have done. If you're not ready to read, then Forex obviously is not for you. Risk management is the next topic, which is 20%. Matters around lot size, stop loss, capital protection, drawdown control. You need to have that figured out in your head to say, this is how much, more like what I would call a trading plan, where you get to plan what lot sizes you're willing to risk on a particular trade, how much you're willing to lose on a particular trade compared to how much you're willing to gain. So you're willing to risk maybe $1 to gain $3, which would be a better approach than maybe trying to risk $1 to gain $1, which is almost gets you nowhere. Drawdown control, when you can take out profits and leave some runners running. So there's that whole risk management aspect of it. Then the last one is the market age, which is 10%. And this is the mistake most traders starting out make. They start with the market age, which is the 10%, and they forget or neglect risk management and psychology. Market age is always very important, guys. Very, very important. So we're talking about your strategy and how you execute your strategy. This all forms part of your edge, and you have to be able to make meaning out of the madness or randomness of the charts. It's very clear, guys. Market age is something that we all started out with. We thought indicators were the holy grail. For some, indicators work. For others, they don't work. Others, it's price action. But you just have to figure it out, or what your market age looks like. And yes, I said it, that for some of us, we started out with indicators, but we felt that over time that indicators were just a waste of data for lack of, because you're always downloading indicators. So I always say indicators sometimes are just a waste of data. Forgive my bias if you are one of those who works with indicators. And then lastly but not the least, always pick a reputable broker. If you're wondering which broker I use Deriv. They are quite a reputable company that have been around for over 20 years. I don't trust these modern brokers which keep popping up every now and then. I prefer brokers who've been around for quite a while, and Deriv is just one of those. So for me, those are the 4 fundamentals of 4 pillars of success in Forex. Number 1, psychology, which is 50%. Risk management, 20%. Market age, 10%. And then lastly but not the least, having a good broker. That also gives you a good percentage right up there. All right, guys, thank you for your time, and wish you all the best. See you on the other side.